Melbourne, Melbourne, Melbourne. Why are all property investors talking about Melbourne? In today's episode, I'm going to talk to you about why is everybody talking about Melbourne right now? What is the data saying? What does a typical investment property look like? And I'm also going to share with you a big red flag that I'm seeing. You see, the funny thing with the Australian property market is there always needs to be this glory city or this city that everyone's flocking to, and it's the one place that they talk about. And for the last, I guess, 3 years, that was Perth, and now it's Melbourne. And you're going to see things popping up online in articles and in the investor circles, people talking about the Melbourne market. But I just want to warn you, because the Melbourne market is very, very different to some of the former glory cities, especially Perth. Very, very different landscape. And I'm going to talk to you about what those are today in today's episode. In case you don't know me already, my name is Steve Williams and I'm the founder of W Property Advisory, and I've helped people across the country get their foot into the property market with an investment property. And we've done a lot of our purchasing in Perth because that's where the numbers made sense, and that's also where investors wanted to buy. But we do buy nationally, and we are buying for clients in Melbourne as well. So I also have lived in Melbourne for about 5 years of my life, so I know the place intimately, and I also have a good understanding of other cities across the country and how Melbourne compares to places like Sydney, Queensland, Perth, and because I've actually experienced these places as places to live as well, not just invest. I'd also love for you to subscribe to the channel. I release an episode every week talking about rentvesting, property, and getting ahead. So hit that subscribe button, whether you're on Spotify or YouTube. Love to have you come back again so I can share what I'm seeing on the ground. And also, please, I'd love to get your comments. So if you disagree or if you agree with what I'm saying, pop it into the comments. I'd love to hear from you. And I'm also happy to answer any questions. And I do read the comments, so I'd love to hear from you. First things first, let's actually talk about what does a typical investment property look like in Melbourne. A lot of the people that I speak to, they're wanting to buy properties around the $650,000 to $900,000 mark. Most investors spend about that amount of money. Of course, you can spend more, but really the entry point for the Melbourne market is somewhere between $650,000 to $700,000. But I'm not talking, a nice inner city suburb. We're talking about some of the fringe suburbs to get your foot into the market, whether that's an older house on a larger block or a newer house on a smaller block. Now, I'm talking about houses. Of course, you can also look at villas and apartments. They do grow at different rates and they do have different, results you're going to get from those. So I'm not really going to talk about those today, but I'm going to make this observation. Now, when the Perth property market started to take off, it took off in the lower end of the market. So all the cheaper suburbs, and you could buy it like 400,000, they jumped first. And then the middle suburbs or the middle ring, the next tier up, they started to grow. And then the top tier started to grow, and everything grew up from the bottom. Once that took place, people were like, oh, I can't afford a house anymore, so why don't I buy a villa, a townhouse? And people also were starting to buy apartments, which they'd been very flat for many, many years. So typically that's the cycle that we're seeing. And I really think that's probably going to be the case for Melbourne as well, that things are going to start at the bottom, then move their way up. And then, of course, apartments and townhouses will follow. Now, why do property prices grow? It's all a balance of supply and demand. So when there's excess demand and low supply, essentially prices rise. But it does require buyer activity. So let's actually jump in and look at what the data is saying about Melbourne right now. This here is the CoreLogic chart pack. It's now called Totality, apparently. It's just changed recently, but you can download this from the CoreLogic website to get all the latest data. This is what it's saying about Melbourne. So over the last year, dwelling prices actually dropped by 1.2%. However, in May, the dwelling prices grew by 0.4%, and in the last quarter, 1.2%. So we're starting to see a shift where it was going from negative growth, and now it's starting to move into positive growth territory. This is the whole property market. Now, there's also markets within markets. Different suburbs perform better than others. The other big thing as well is, as I said, a lot of property growth is driven by the bottom at the current moment. So we're actually seeing prices in some of these pockets grow by 4 to 7%, per annum. So they're growing a lot stronger than what these numbers are actually saying. So it's a little bit misleading, because if you're looking at these numbers, you're probably thinking, it's a little bit slow, but it's definitely not the case. A lot of the lower end is growing rapidly. As I said before, property prices, it does take buyer activity. So when there's buyers happening, it means property prices go up. And really a real quick reason to explain this is because if there are 5 people going for a property, 4 people miss out, those 4 people are going to come back with a vengeance on the next one, and that's going to cause property prices to grow. Now, if we look at the national sales data, we can see that there's actually been a change in sales volumes in the last 12 months to May 2025. So Melbourne's actually been 6.25%, which is actually pretty strong. Darwin's been significantly higher, Canberra a little bit higher, and Adelaide a little bit higher as well. But if you compare that to other cities like Perth and Hobart and Brisbane, and even Sydney's gone backwards, that buyer activity is certainly starting to come through. Another good measure is median days on market. And you can see at the moment, median days on market is 36 days to sell a house. And again, this does vary depending on if you're buying at the lower end of the market or the higher end of the market. But certainly in some locations, in those quick moving areas, we're seeing properties sell in 10 to 20 days, sometimes even quicker. This is another really interesting thing. We're looking at listing numbers and the change in listings of properties for sale this time compared to the same time last year in Melbourne, it's actually dropped by 7%. Okay, so you bought a property. What does the rental market look like? Now, this is where things aren't that great in Melbourne. So the rental yields, we are looking at quite low yields compared to other capital cities. We're looking at 3.7% for Melbourne. And this, of course, is the average. So some of the inner city suburbs at higher price points, we're looking at like 2-3% yields. And some of the outer fringe suburbs, you're looking somewhere in the 3, potentially 4%, but definitely not as strong as what we're seeing in Perth, where you could get rental yields of like 5 to 6%. So Melbourne is definitely not the sort of market you want to get into if you're looking for cash flow. It's really the capital growth, which is going to be the strategy for this city in the next couple of years. But what's happening with rental growth? The rent rate's increasing. Melbourne is very soft, so 1.5%. And this basically means that there's not a huge amount of people looking for rentals. All right, so is rental rates increasing? In Perth, in the last couple of years, we saw rental rates increasing by like 10, 15%. It was absolutely crazy. Melbourne's very different. At the moment, it's at 1.5% growth, which is well behind all the other capital cities. Most of them are around 4-5%. So Melbourne rental rates, rental growth is actually quite slow. But this is turning around because more and more people are moving to Melbourne. The population, people are starting to move back after the COVID era, which wasn't very great down in Melbourne. So it's likely we're going to see an increase in demand, and we're also going to see vacancy rates potentially come down. However, we are seeing in a lot of these investor heavy pockets, places like Craigieburn, Cranbourne, also down the Werribee Way as well. These places where people are hitting as investors, we're seeing the vacancy rates increase. So some of those areas, they're now hitting 3-4%, which is a bit scary because if you're buying a property, you might find that it's going to take 1 or 2 months to find a tenant. However, if you're looking for growth, then you're likely going to see that in the next couple of years based on what we're seeing with that buyer activity and also the imbalance of supply and demand. All right, so speaking of supply and demand, how's population growth looking in Victoria? If we look at this data here, we can see that Victoria grew at 1.9% from the latest ABS data, which is quite in line with what other cities are doing. Queensland's also 1.9%, but it is behind WA at 2.4%. And during that real peak in Perth, where we saw property prices grow by like 20%, that population growth was actually at about 2.8%. So in my opinion, there's not as many people moving to Victoria or to Melbourne as there was to Perth. So really the demand is not as high. So I really don't think we're going to see this 20% growth that we saw in Perth. Growth is going to occur because we're already seeing it in Melbourne, but certainly I don't think it's going to occur to the extent that we saw in Perth. So we've looked at the macro data. I now want to dive in and look at some of the pockets that investors are buying to see what do the numbers actually look like. And as I said before, if you're buying investment property, most people are spending 650 to 700,000 in Melbourne. If you go higher, of course, you're going to get a better location and a better property. So if you're buying a property, let's say 700,000, again, it's not going to be in the best suburb, but you're likely to get about 520 to 550 a week rent. So the rents are quite low, and that's going to give you a yield in the 3%. Let's dive in and look at a map. So this is the city of Melbourne. The city is located here on Port Phillip Bay. And we can see that the suburbs we're looking at, which are around that 700,000 mark, that's all the yellow and light colored ones here. So you're looking at all these fringe suburbs around here, and then also down the southeast as well. So some of the pockets that investors are buying are definitely around the locations down near like Cranbourne. Frankston's already over 800,000, even though the median is 750, but in that sort of region there. And then also sort of through the Dandenong region, and then up north as well. Some of the cheaper pockets like Broadmeadows, and then also up to Craigieburn. And some are also buying down to Werribee and Hoppers Crossing and Point Cook, and then also down the Geelong region. But we're going to not include Geelong in these numbers because it's technically sort of like a little, separate town. It's a little bit like the Gosford of Sydney or the Mandurah of Perth. But let's rule that out from this conversation. So we've now looked at the median house prices. Let's see what the vacancy rates are doing. So I just want to highlight that a good vacancy rate is under 2%. If it's under 1%, it means it's an extreme case and it's going to lead to growth in rents. And Perth, we're seeing a lot of places like 0.5, 0.7% vacancy rates. But if we look at Melbourne, we can see some of those pockets that we're talking about, which are very popular with the investors. The vacancy rates in some areas, we're looking at like 3%, some are around 2%. Let's also go up to the west as well. So we're looking at sort of like 3% through here and around 3.7, and some are even approaching 4%. So that's something that we just want to keep an eye out on. Of course, we're going to get that property growth in the short term, but we just need to make sure we can also get tenants as well. So that's something that you just want to keep an eye out on. This is something we also want to keep an eye out on here. So this is building approval levels, which is basically supply. So when they're building more properties, that's going to add to the rental pool and also the sales pool. So it means that if there's an excess of supply and lower demand, it could mean property prices stagnate or go down. So if you look at some of those locations we're talking about, they're very much in those development areas. So some of these places, if we sort of look at places like sort of Cranbourne, some of the areas around 20%, even Clyde, we got 17% approvals. And if we look up to the north here, we've got pockets in like Greenvale where it's like 4%. Down on the west, we've got approvals in Werribee of around 5%, 4.8%. We've also got approvals in Hoppers Crossing about 0.2%. So really, as you get in closer into the city, generally approvals are lower because there's less land available. But if you're on those fringe suburbs, there's definitely a lot of land in Melbourne, and it's also very flat. So it's a lot easier to develop than we have in other cities, like, for example, Sydney and Brisbane, which is, I guess, a bit more hilly and bumpy. And there's also got rivers and creeks and all sorts of things. So there is potential they could build a lot there. But what we're seeing is that the house prices for an established property are lower than what it costs to buy a block of land and build on it at the moment. So that's why there's basically value in established properties right now. And it's why they're not, it doesn't really stack up sometimes to build a property because the cost of building has actually skyrocketed. And I really wanted to point this out because, as I said, I'm going to share with you a big red flag at the end. And I just want you to remember this because I'm going to run through it in a minute. All right, so run through the data really quick because I want to keep today's episode nice and short. I'm going to do a more in-depth one in a future episode. But now I want to talk to you about some other things which really are not great for Melbourne and why I think that Melbourne is not as great as the investment opportunity a couple of years ago in Perth. The first one is land tax, and this has scared a lot of investors off. A lot of investors have sold up. However, now people are kind of getting used to it. They're sort of starting to come back to Melbourne, and that's why we're starting to see more interest there. So just how big of a problem is land tax in Melbourne? Well, I can tell you that Victoria has the highest land tax in the whole country. If you look at the land tax for a $600,000 property, you're forking out $2,250. If you're buying a property worth $1 million, you're looking at $4,650. And this is per year. And this is separate to your council rates. So you still got your council rates and all your other expenses of holding the property. Having said that, if you're buying in some states like Queensland, you can find your insurance costs and your council fees are actually higher. So sometimes it does actually balance out, but it's definitely not attractive as an investor to be hit with a fee like this. The other thing to note is when you're buying in Victoria, the stamp duty is actually the highest in the states as well. If we're buying a property, say $650,000, you're actually paying almost roughly $10,000 more than all the other states. So if we're buying something for $650,000, we're paying $34,000 and $70 in stamp duty compared to like 24,000 in WA, 22,000 in Queensland, or 23,000 in New South Wales. So that's an extra 10K expense that you're going to be up for if you're buying in Victoria. I now want to show you this as well, because this is, I guess, the harshest rules that any state has around rental property requirements, and it's very comprehensive. So look at the Consumer Affairs website, but it does get quite complicated. There is checklists in here, but if you're buying a property and turning it into an investment property and having tenants in there, you need to make sure you meet all of these rules here. And sometimes when you're doing an inspection, there's no time to check all of this stuff. So normally what I recommend to people is keep 5,000-10,000 aside in case you need to fork out some money to get this stuff sorted. But some of the big ticket items are things like your heating. You need to make sure that the heating is of a certain star rating and that it's energy efficient. And if not, you're going to have to decommission it and potentially replace it with a split system. You're also going to have locks throughout the property, and there's also requirements for the curtains and blinds, just to name a few, but have a look through these because it can add up to your cost of buying a property and getting it tenant ready. And the thing is, you can't advertise the property for rent until all of this stuff is sorted. All right, so hopefully I haven't turned you off Melbourne, but I really want to share with you the actual facts because it's quite different to buying in Perth. It was a lot easier to be an investor in Perth. It's, I guess, a lot more pro-investor friendly, whereas Victoria is not as friendly for investors. However, we could see government change next year in the Victorian state election, which is going to be interesting to see what happens with that. All right, Steve, now what's this red flag? Show me, hit me with it. What is it? Okay, let's take a look at this. This is the State of the Housing System report, which came out this year. And this is actually showing you how much of the required housing is going to be completed. And if we look at all the states here, we can see Victoria, we need 306,000 dwellings, and there's going to be around 300,000 completed, which means that 98% of properties are likely going to be completed. So to me, that means that the supply is going to be reasonably good in Victoria and Melbourne, and it's actually going to keep up with what the requirements are. Now, of course, these are all forecasts and governments often get it very wrong, but this is just something you want to watch out for. Where if you compare it to some of the other states like New South Wales, only 65% of the required housing is likely to be completed. South Australia, 71%. We've got ACT 78%. So most states are sitting around the 70-80% mark, whereas Melbourne's actually close to 100% of the requirements. What does this mean? Well, we just want to make sure that the supply is not too high, because if it is and it doesn't meet what the demand is, then it's likely property prices might stagnate. They could even go down if that supply exceeds. But of course, there's always markets within markets. A lot of these housing developments will occur on those fringe suburbs. Not everyone wants to live there. So the inner city pockets are likely to still perform well because they're close to amenities, close to public transport, and close to the city of Melbourne. Another thing as well, Melbourne was actually the most livable city in the world. And you saw that in the headlines for a number of years, but that's actually now changed and no longer is the most livable city in the world. And a big reason for this is they're actually having a crime issue at the moment. So apparently the crime is actually at a 10-year high. So that's just another thing you want to watch out for if you're buying in some of these suburbs where it's the lower end of the market. You just want to check that you're looking out for the crime statistics and potential risks associated with buying there. I hope this has been helpful for you. Again, pop your comments in, subscribe to the channel, and remember that when you're buying an investment property, you always need to start with your why and then work out your where and your what that's aligned with your why. If you're looking for a cash flow location, Melbourne is not the place to buy. If you're looking for growth, the numbers are looking good in terms of that sales activity and people are flocking to Melbourne. So we're likely to see really good price growth in the next couple of years, but you just need to manage some of those risks and also those challenges in being an investor in Victoria. I'm Steve Williams. Hope you found today helpful. Until next time, let's Rentvest and get ahead together. All information contained in this podcast is general in nature and does not consider your individual circumstances. You should consider the appropriateness of this information with regards to your individual objectives, financial situation, and needs, and speak to a professional.